Tuesday, the 11th of July. Welcome everyone to the program. This is Business Morning with me, Paul Sinoma. You are live from Lagos, Nigeria's economic epicenter. Thanks for coming through on the program with us this Tuesday, the second trading day of the week. Of course, the big story around the world, still around the world of oil. It's a crude world of oil with a lot of awakening. Of course, yesterday was the news from the Kuwaiti oil minister that Nigeria and Libya may be invited to the July 24 meeting in St. Petersburg, Russia, to defend their current oil output. Now, overnight, Bloomberg reports that if Nigeria and Libya are asked on July 24 to shave some of their oil output or cap their current output, there may still not be enough to fix the global glut, the rising inventories, and the flagging world oil prices. Although a little bit in a gentle recovery this morning, prices are well below $50 a barrel. And to make matters worse, Goldman Sachs also reports by Bloomberg this morning that the world oil prices, in particular the US WTI, may have to fall below $40 a barrel to rebalance the market across the various parameters. That's the latest this morning, and we're looking at the news that OPEC and Russia, who are the two leaders of the world oil production, at least as of today, may have to adjust their own quotas to compensate for Nigeria and Libya rapid output additions of about 440,000 barrels per day since May and July 2017. Now, OPEC and non-OPEC oil producers meeting, as you have heard, in Russia, St. Petersburg, on the 24th. They're looking to check up on the agreement they reached in May on how to curb output, reduce inventories, and boost prices. In the meantime, OPEC Secretary General Bakindo says the deeper cuts are currently not on the agenda in Russia, and a formal OPEC meeting due in November the 30th. And still unpacking the Etisalat story in Nigeria, the problem with this telecommunication company with 13 banks. Now, this is what's already on social media and in the news, that Etisalat of Abu Dhabi says the Nigerian unit has been given 3 weeks to phase out its brand name in Nigeria, as the management agreement between the parent company, or what you call the brand name owner, which was Etisalat of Abu Dhabi in the UAE, and Etisalat Nigeria, they've sent a termination of the management agreement. That letter has been sent to Nigeria. Etisalat CEO out of Abu Dhabi says that the brand agreement won't be a long-term thing. So, according to him, the Abu Dhabi Etisalat is taking out the brand, and in the long term, Etisalat won't be in Nigeria. So that's what you call going, gone. Meantime, let's finish off on the refinery side. The Senate committee is still going ahead probing the decision of the Minister of Petroleum Resources to concession or engage in turnaround deal with Ajib ENI and Oando Nigeria, a consortium of these oil firms, to rehabilitate the Port Harcourt refinery. Now, the one-day public hearing has been fixed for Thursday, July the 13th. Let's go straight onto the market, where the currencies, the Naira was largely positive on the first trading day of the week. Later in the evening, the central bank threw about $142.5 million into the market after conducting an auction on Friday last week in excess of $240 million that affected liquidity on the market street. At the interbank spot market, 306.00 Naira dollar relationship, 405.01 Naira pound, Naira euro, 358.54. Flip that and look at the street, where the Naira gained almost 1% on the dollar, 367, and 1.43 on the euro, 414 at the market close. At the investors and exporters window, the Naira was 361.86. And of course, the news was the I&E window, seeing about $3.8 billion transactions since April the 21st, when that window was opened by the Central Bank of Nigeria. Let's dip our fingers in the stock market. A very gentle comeback on Monday after we lost 1.99% on the local stock market index last week. We opened on a very gentle recovery on Monday, about 0.5%. And you can see the numbers there on your TV screen. In terms of turnover volume, it was a bit of a decent day, but largely lackluster. Less than 200 million shares were traded. If you look at the sectoral ranking for the 5 major sectors, so 6 or 5 of them, yes, that we do. Oh, everybody's almost in red. Oh, sorry about that. Sorry about that. The banking index was positive, 1.97%. That should be showing a green shoot. And the oil and gas, 0.2%. That should also be in green. So we had 2 green shoots on Monday to start the week, and that helped the market about 0.48% comeback. However, the unlisted securities market of the NASD OTC was a very sharp decline on Monday to start a brand new week, 2.98%, almost 3%. That's quite massive, with a very small volume of about 40,547. I'm going to talk more about the consumer goods market and all that in a few seconds. But let's pace up a little bit and bring in the fixed income market. Of course, the secondary market roared on Monday to start a brand new week because look at the FGN papers via the FMDQ OTC Securities Exchange. We did a total transaction of 11.6 with single digits when we finished up on Friday. And these were the most actively traded FGN bond Naira papers on Monday. In total, 90 transactions for 11.66 billion. The treasury bills was much broader, however, on the secondary window, and see the massive 418 transactions on the paper treasury bills maturing 20th of July 2070. That's the paper maturing in a couple of days from now. That's sometime next week. And don't worry about why that is very massive there in terms of the transactions. Look at the total. 178.95 billion naira in a single day on FMDQ OTC Securities Exchange. That's quite massive. To the north. That's it, isn't it? Okay, let's get Christian Orejakwe, who is the head of research at Codros Capital, to join this conversation here in the studios this morning and talking to the state of the economy and the consumer goods companies listed in our markets, what they call disposable income for consumers. And if you should invest in consumer goods, put your money in what you eat, drink, and use. Good morning, Christian.
Good morning, Wilson.
It's good to have you here.
Thanks, pleasure.
The economy is said to be recovering, and that's what your analysts, macroeconomic analysts, are saying. So if the economy is recovering, how is this likely to impact on consumers?